Hey y'all, I'm Nikki, and welcome to the Working Mamas Podcast. I'm a mompreneur, CPA, and award-winning writer with my career advice featured in your favorite magazines. I'm sharing the accounting tips that business owners need to know, CPA exam study tips, and career advice that millennials need to win in these corporate streets. You'll also hear the frolics and frustrations of a mother to two growing kids. Let your network know that you're listening to this episode by using the hashtag Working Mamas and tag me at Nick Winston CPA on Instagram, LinkedIn, and Twitter. Okay, so I was having a conversation with my sis, one of my friends, my homies, my day ones, and she saw what somebody posted on social media. I don't know if it was an accountant, a CPA, a consultant. I'm not sure who the individual was, but the person was talking about LLCs. So my friend sent me a screenshot and she's like, sis, is this true? Like, is this correct? And so I sent her an explanation to say, this is correct to a certain extent. So what the post was talking about is how you form an LLC, you get these tax benefits, you get this asset protection, and it was basically just kind of hyping up LLCs. And as a certified public accountant, as somebody who has worked with a number of business owners with both new and established businesses, I've worked with entrepreneurs in multiple industries. I've spent 16 years in corporate accounting. So I I know accounting in and out. And the one thing that really makes me cringe is when I see business owners online or whatever saying, I got my LLC, I can't be sued, this, and this, and the other. First of all, and I just, let me just say, this episode, I'm gonna keep it short and sweet. It's only gonna be about five to 7 minutes, but I really want to speak to the entrepreneurs, the online boutique owners who sell hair or sell bundles or sell clothes, the content creators, you make courses and people buy your courses. Really any entrepreneur who has an LLC. Now, an LLC, a limited liability corporation, is one of many business structures that a company can choose when they are forming a new business as a separate entity, separate from themselves, separate from your personal business, totally standalone business. And a lot of times people are forming LLCs because that's the flavor of the month. That's what they hear everybody talking about. That's the hashtag LLC is what is going on. But when people form these LLCs, they're forming these limited liability corporations because their business bestie formed one, because somebody else that they know has a business and that's what they decided to do, and really hadn't given any thoughts, or probably isn't even aware, most likely that's the case, that new entrepreneurs are not even aware of the options they have when it comes to business structures. So there are sole proprietorships, there are partnerships, there are LLCs, there are corporations, both an S or a C corporation. And a lot of people just default to the LLC because that's what they know and that's what they hear about and that's what's popular. But what entrepreneurs fail to do to start their business off on the right foot is to upfront, when you have a business idea, when you decide you want to launch a product or a new business, where entrepreneurs go wrong is that they do not invest in a CPA and an attorney. Because myself, as a CPA, a certified public accountant, which means that I I know my shit when it comes to accounting, is what that means. It means that I can create, review, audit, sign off on financial statements, and my signature is official, is what that means. So if you decide to start an LLC just because that's what everybody else is doing, but you don't understand what else is going on, that's how people fall into this trap of wondering how they got sued, even though they have an LLC, and they thought that because they had an LLC, they had this asset protection, right? Meaning that if you sell something to a customer, the customer doesn't like it, or they're injured or damaged in some kind of way, and they come back and sue you, that they can sue the assets of the business, but they can't come after your personal home, your personal car, personal accounts, etc. So the one thing that really makes me cringe is like, why are you even establishing a business just based on that? I'm going to establish a business as an LLC because that means I can't be sued. If that's the premise of establishing your business, then you need to go back to the drawing board and again hire you a CPA and talk about what you're trying to do and what you're trying to accomplish, because whatever type of business structure you pick, it has a domino effect on the rest of your business, from how your business is taxed, how you make decisions, how you govern the business, whether or not you have to go to your state or your county and establish the business or get a business license. An LLC is fairly straightforward, very simple, and fairly inexpensive to start. So that's another attraction to this type of business structure. But the thing that goes wrong is that people cling on to that I can't be sued mentality, and they take it and run with it, when the truth is, okay, so let's talk about what an LLC, what the requirements are, or some of the factors and the things that you must meet in order to even file an LLC. This is the part where entrepreneurs get it wrong. This is the part where the entrepreneurs that I know, that I've talked to, that I've worked with and consulted with as my clients, this is where they run into the brick wall. And as soon as I see that they're doing this, it's always like, oh, I didn't know. And I'll tell them, like, you have an LLC, right? Why did you form an LLC? 99% of the time, the reason has something to do with, I formed this LLC so my business won't get sued. And then I start looking at their accounting records. I start looking at the way they do business. And I say, you know what? Actually, even though you have an LLC, you can still be sued. And you can still be sued to where somebody can sue your company, and they can also take your, well, not take, but sue you for your home, your vehicle, your personal accounts, all of your personal assets. So what I'm referring to is a term called commingling. Now, there are things that members, because if you own an LLC, you're not an LLC owner, you're an LLC member. Okay, so there are, of course, the asset protection that an LLC provides, the fact that it's a separate legal entity. So when you work on building your business credit, which is going to be a separate podcast episode, but when you work on building your business credit, you can build it in the business's name instead of your own name. And sometimes you may not have to do a personal guarantee. So this is the part that I really want everybody to understand. So if you are an entrepreneur, a business owner, a consultant, a freelancer, a gig worker, whatever, listen to this episode, share it with your network, share it with your business besties so that y'all don't get caught up thinking that y'all can't be sued when you actually can. So when you form an LLC and you get that asset protection, which again means that if somebody sues your LLC, they can sue your LLC, your business, but they cannot come after your personal assets or any of your bank accounts. Um, Now, like most business owners do, and it's just because of lack of not knowing, it's a lack of knowledge. This is why I say at the beginning, invest in a CPA or an accountant some type of financial expert to help you talk through these things, because number one, they're going to point you in the right direction. Number two, the investment that you make in your CPA is a tax deduction for your business. And number three, as you start to grow, your customer base grows, your profit grows, then your CPA can be there to talk you through how to take your business to the next level. So that's the first part. The second part is that a lot of LLC owners don't understand the laws, and there are variations in the law depending on what state you're in. I'm in Georgia, so I'm very familiar with the LLC laws in Georgia, but there's something called commingling that too many business owners are doing, and they don't even understand that they're doing it. And it's this commingling that can put you in a position where your LLC is being sued and your personal assets are also on the line. Now, commingling sounds like a big word. What is this? What does this mean? It just means that you're mixing things together. So let me break this down in some basic non-CPA terms. Commingling means you have one account that you pay your bills out of, that you pay your mortgage, your car note, your car insurance, you buy groceries. Maybe you have a day job, your direct deposit from your day job comes into this account. And then you have an online boutique. I'll say you have a cannabis business. And I'm saying that because I have really been working with a lot of entrepreneurs in this space, and we've been connecting and talking about things. And there's a lot of learning to be done in that space. So I'll just use the cannabis space, for example. So let's say you have a cannabis business. Um, you know what? That's a bad example, because that's going to make this podcast too long. I'll talk about somebody who has an online boutique. You make t-shirts. Okay. So let's say that you work during the day, and like I said, you have this bank account where your direct deposit comes in, you pay bills, you buy groceries, your Netflix subscription, all of that comes out of this account, right? So you start this t-shirt business, you make a couple dope shirts, everybody's buying the shirts, you popping online, money's coming in, your Stripe account is popping, the payouts are coming through every day, and these payouts, excuse me, if you've never listened to my podcast, if you've never listened to the Working Mamas podcast, and this is your first time, first of all, welcome. Second of all, I speak the unfiltered truth on this podcast, and I don't edit this podcast. So if I cough, if my puppy runs in here, if my kids open the door and start talking to me, look, this is real life that I'm living over here. So if that's what happens, it happens. I'm not going for perfection. I'm going for giving y'all this knowledge for free that a lot of people who look like me, who run businesses, do not have access to. And if you do have access to it, you probably don't have to pay an arm and a leg for it. So one of the reasons I became a CPA is to educate my community of Black and brown, underserved and overlooked entrepreneurs, so that they have access. They have somebody, a Black female CPA that looks like you, that can point you in the right direction when it comes to business. So let me get back to commingling real quick, and then we're going to wrap it up, and we gonna go on to another episode. But so your direct deposits coming in. I know I done said that like 3 times, but direct deposits coming in, and you paying all your household bills and everything out of this account. Your t-shirt business is jumping. You getting all these orders coming in. Your Stripe payout goes into that same account that your direct deposit goes in, that you pay your mortgage out of, that you pay the car note, the daycare, the Netflix subscription, the groceries, all of that, right? So as you do that, as you have your income and your revenue from your LLC, from your entity separate from you as a person, as you have that money coming into your personal account, you are co-mingling. You are mixing your business money with your personal money. And under the laws of an LLC, that's considered a misuse of your company's funds. Let me grab some water real quick. Also, if you've never listened, I tend to have my water with me. It's either some water with a splash of vinegar, some lemon ginger water, some cucumber mint water, something. But so yeah, come back after this episode, keep listening, share this one because I need y'all to understand this. There are too many of y'all who start these businesses. You don't go through the motions of setting your business up, registering it with your state and or county if necessary. You don't have the proper business insurance. You don't take the time to go to a bank or in this COVID environment, go online and open a business bank account to separate those transactions. Because if you don't do that, if you have one account for your personal transactions and your business transactions, you do not have asset protection even with an LLC. So if you are mixing your LLC money with your personal money in one account, then you can be sued. And you can be sued, and somebody can sue not only your LLC, but they can take your house, your car, your bank accounts, any other thing that personally belongs to you. And I want to say that because so many entrepreneurs are so quick to launch and they want to rush and say that they've done something, that y'all don't take care of the business part of the business. You should be treating your business like it is a business. So aside from the commingling, which is considered a misuse of company funds, there are two other scenarios where you can lose that personal asset protection. So the first is misusing the company funds, mixing business and personal accounts. The second one is in case you have not properly capitalized your LLC. What that means is if you started a business and you haven't invested in the business, or you haven't run the business like it should be run. Now that, just to kind of put some context around it, that is a little bit difficult to prove, because you can say, my business is in the startup phase. I haven't invested that much because I'm trying to figure things out or I'm doing market research. But I just want y'all to be aware of that. The third scenario where you could lose your asset protection is where the LLC members are participating in any type of fraudulent activity. Fraudulent activity is not going to be recognized by the law. So if you misuse company funds, or if you are mixing, in basic terms, if you are mixing your LLC revenue and profits with personal money, you are commingling and violating the laws of an LLC, which means that you can be sued. Somebody can sue your business. They can sue you for your house, your car, and anything else that you own. If you don't properly fund your business, or if your business has an overwhelmingly large amount of debt, then that can be a violation of an LLC. And if your co-owners or members, or however you refer to yourselves, if y'all are participating in any type of fraudulent activity, you also lose that asset protection, even if you have an LLC. So I want y'all to understand that. And I want you to think about it, because I know I struck a chord with a lot of y'all who are like, oh shit, this is what I'm doing. Like, all of my strike payouts go into my Bank of America account, where my 9 to 5 paycheck also goes. And I pay my mortgage with money that comes from my strike payout. If you're doing that, you do not have personal asset protection, and anybody can sue your LLC and sue you as well. So I wanted to clarify that again. A lot of times we shoot ourselves in the foot and we hold ourselves back because we don't know what we don't know. So I am here to try and answer these questions for y'all, to make sure that your business is popping on the internet, but also popping in real life. So this is the first of many quick episodes I'm going to do just to educate y'all on some business basics, some things that you need to know as an entrepreneur. The LLC conversation is a big thing. It is a pain point for a lot of entrepreneurs, because once they realize that this is what they're doing, then they kind of go into panic mode. Like, what if somebody sues me tomorrow and all of my LLC money is in my personal account? So if I struck a chord with you, let me know. I like to be a disruptive millennial. So if I struck a chord with you, let me know. Tag me on Instagram at Nick Winston CPA. And if you have more questions about things that you should be doing in your business, how to understand your revenue versus your profits versus your cash flow, because those are three different numbers, how to determine if somebody's stealing from you and you don't even know, how to make sure you have the right controls in place, how to make sure if you make shea butter jars and you came up with this perfect recipe, things you need to be doing to make sure that you can consistently make the jar with those same ingredients every time. Things like what you need to think about when you start hiring people, how to know when it's time for you to hire people. Should you hire people as W-2 employees or should you hire them as freelancers and contractors? So many things to talk about, so many things I need to put y'all up on game when it comes to being a business owner, because I want you to thrive. I want you to get the money. I want you to be popping on Instagram, but I want your business to be popping and compliant in real life. So again, if this is your first time tuning in, thank you for rocking with me. Come back and soak up some more game and share this podcast, the Working Mamas podcast, with your network, with your friends, family, and business besties. The Working Mamas podcast is on most major platforms: Apple, Spotify, iHeartRadio, and a whole bunch of others. So I would love for you to like and subscribe this episode if you enjoyed it, if it was insightful, if it was helpful for you. And again, share it, because sharing is caring. And if you learned something from this, and now if you have to run to your computer and open up a business bank account and redirect your Stripe payout there, help another entrepreneur by sharing this episode and letting them know that they need to stop commingling, because even if you have an LLC, you can be sued. So I'm here to educate y'all. I'm Nick Winston CPA on Instagram, and I look forward to educating y'all some more. Y'all be good. Let's get this money. I'll talk to y'all soon.